Good evening, Better Get It family. It is Finance Friday, and today I'm going to be showing you how you can manage your cash flow using an Excel template that I've created. The template will be provided via a Google Doc link, which you can find in the description for this video. So let's get started. You will need a few things in order to prepare and customize the template for you. First off, you'll need to know your inflows. Your inflows are your income sources, any money that you have coming in along with whatever that frequency is. So for example, if you get paid on the 1st and the 15th, that would be one inflow, and you would indicate you would have columns for the 1st and 15th of each month to categorize that income. So you'll need to know the various income sources, what their frequency is. Like, is it monthly? Is it twice a month? Is it every other Friday, etc.? And then, of course, what the expected amount of that income is for each pay period. And then lastly, if you have any savings on hand, you'll want that for the starting point in our spreadsheet. And of course, your checking account balance to start with. Next, the next section has expenses or outflows. Outflows are your monthly or, well, your expenditures for a given pay period. That would be like your phone bill, your cable bill, internet, gas, any expenses that you have that occur every month. You could estimate how much you spend on groceries, your rent, of course, and then you'd also want to put in the expected due dates and amounts of those expected expenses. Lastly, since the template I'm providing is in Excel, you would need to have Excel software in order to use it. If you don't have Excel, you could recreate it in some other spreadsheet software if you have that, or you could manually create at least a budget just with pencil, paper, and a calculator using some of the same information that we would use in our cash flow. It would be a little difficult to do a cash flow manually, but not impossible. I will try to cover what you would need to do if you were going to attempt that. All right, let's move on to the spreadsheet. So here we have the template. So it's been completed with some sample information just so you can get an idea of how it works. Let me make it a little bit bigger for you. So we want to start off with putting in what our cash on hand is. So what this means is this is the money you have in the bank right now. So that beginning cash balance would be whatever money is available in your checking account today. So we've assumed $890. And then if you have a savings account, whatever amount you have saved up, and that shows us the total cash on hand. I've put in an extra column. If you have an additional checking or savings, you could use this row to capture that money. So we're assuming a start of $1,890 on hand. So this is money that's immediately available. This is not 401k money or stock money or whatever other assets you have. This is money that you could go and get today if needed. So once we have those beginning balances, we go to the next section. And that's our cash inflows. As I discussed in the previous slide, these are your income sources. So I've indicated here just net pay. If you had multiple jobs, you could put the company name and that pay, and then perhaps indicate the frequency of that income. So in the example here, I'm assuming that you get paid every other Friday. So we have the last payday or to the most recent payday on the 14th, and then the next payday on the 28th. So we're putting in a net pay after taxes. So this is what's actually deposited in your account of $1,000 every other week. And then, since this is a cash flow and not just a monthly budget per se, it goes over, this particular one is for a whole year. So I'm actually showing pay periods every 2 weeks through 2021. And so with that, if I'm expecting a bonus at a particular time of year, like in this example, I'm showing a bonus in December of $1,000. So I could estimate what I'm expecting that to be and place that in the appropriate column so that I could factor in that income for my cash flow purposes. Likewise, if I'm planning to transfer money from my savings or to borrow any money that's going to come into my checking account that would be immediately available to use elsewhere, those are the types of things that I want to capture here. For the most part, your most active row would be your net pay, and then these other rows might vary as far as usage. So based on what we have so far, we started with $1,890 in the bank between checking and savings, and then we've estimated $1,000 of income for this 2-week period between August 14th and August 28th. So we've got $1,000 plus that $1,890 available to pay bills if needed. So now we come to the outflow section. These are your recurring expenses and also any additional expenses if you're planning for an expenditure at a different time during the year. One powerful thing about the cash flow over, say, a monthly budget is you can see the impacts over time. So in this line example, we have a vacation that we want to take in October, and we're estimating that it'll cost about $500. So if I scroll up, I can see that at that particular time, at least for that month, we're fine. But if we take that vacation as planned, in the following 2-week period, we're coming up short. This cash flow was set up to show in the red. It'll show in the red at the bottom if the balance forward drops below $500 and or is negative. And then, of course, it'll show in the red at the bottom if you're coming up short. So again, this allows us to plan. If I adjust the cost of this vacation, then I'm no longer negative for that following period, but I'm still coming up short in November. So I might need to reduce my costs even further, or I would want to reduce it until I was no longer negative, or possibly cancel it altogether, which allows me to stay above zero and not overdrawn. So that's the real power in a cash flow. For me personally, I use this whenever I'm planning or thinking about a large expenditure. I can plug in what I expect that expenditure to be and see whether or not it'll negatively impact my cash flow over the course of the year. So kind of continuing with the expense section. So you would want to list out all of your bills that you expect to have every month. And I've put in several possibilities here: phone bill, rent, electricity, etc. I've put in what the estimated amount is each month, and also the day of the month that it's due. Now, this day of the month that it's due is really critical because that's going to tell you which column to put that expenditure in. Obviously, if you've got more than one pay period per month, then, and you're only going to have that bill once a month, then you have to know which check is going to cover that expense. So in the first row example, we have a $100 phone bill that we're expecting on the 20th. So that bill is going to be due before our next payday on the 28th. So it needs to be covered by the paycheck we receive on the 14th, and that's why it's in that column. And so as we scroll over, you'll see that each time it's placed in the column for the pay period that's going to have to cover that expenditure. Now we can adjust accordingly. So if we want to make this show our current situation as of today, we can change that beginning balance to exactly what we have on hand. So let's say we paid the phone bill. So I'm changing my beginning balance to $790, and then I'm going to take that $100 out. And then we see how it affects the cash flow. So the net change should be about the same. Well, it shouldn't change because I've just taken it off the top. But it allows us to use that first column to show exactly where we are today. And then the second column would be whatever our next payday is. And, it automatically is adjusted based off of the previous column. So really the only columns that you maintain or cells that you need to maintain are, of course, the net pay, the beginning balance information. Most of the information, at least in this top section, the information to the right is calculated based off of the previous column. So you can see up here in the top left when I get on that row that there's a formula in there. So it's looking at the previous information. If you were going to create this manually, you would populate each section, create a subtotal for what you're starting with. You'd have a total for your inflows, your income. You would have a total for your money going out, and you'll notice it's times -1, so we can make that negative. And then lastly, we add all that up. So we're adding our beginning balance to our income for the period, less our expenditures, and this is what we have left over. Then that leftover amount is being copied to be the beginning cash balance for the next column. Another little feature is if you have a savings account and you're saving, whether it's each period or every other period, that savings row and column amount is being added to the savings up here. So you can see up here, since we're saving $80 a month, we see it go up every 2 weeks. It's going up by $80 because it's adding that transfer to savings amount up there. So that's how you can manage your cash flow using this template. All you would need to do is click in mostly the fields. If it's shaded in white, then you would enter the appropriate amount in the appropriate column. If it has, or if it's not shaded rather, and it's white, then you would enter values. If it is shaded, then most likely it's being used as part of a calculation somewhere. There are comments on certain cells to explain what's happening there. There are also notes in the first column as to what that section is or row is for. And that concludes my overview of how you can create and manage your cash flow. If you take this template and populate it with your personal information and update it with each pay period, then you can see where you should come out, not only for that current period, but also if I scroll all the way over, the total column is also showing me what I'm spending per year in each area. So if necessary, or if at any point I end up in the red, I can look at those expenditures and decide what can I do to return to where I'm not negative or close to negative. So like, maybe if I'm in the red that month, I might skip getting my hair done or buy fewer groceries so that I can get out of the red. But that's what a cash flow allows you to do. Now you can accomplish the same thing to some degree with a budget, but you would have to update it with the same frequency, and it would be difficult to see it over a period of time like this. And that's the value of a cash flow. It's showing the ins and outs and your net cash on hand for each period, as opposed to just an overall estimate like a budget does. A budget gives you more of a ballpark, whereas the cash flow is showing your actual ins and outs. And as you have the information available, you would update your estimates with the actual billings. So this concludes our teaching on how to create and manage your cash flow. Thank you for watching. If you have questions or comments, you can either put them in the comments on the video or feel free to email me at youbettergetit1@gmail.com. Also, feel free to join us in the Better Get It Facebook group. Have a great evening.